Hello investors, welcome to Simpli Stocks. If we analyze the investing style of Warren Buffett, who has been the world's most famous and most successful investor, we will notice that his portfolio has always had a large allocation of financial stocks, meaning banks, NBFCs, insurance companies, etc. Similarly, in the Indian markets, we have examples like HDFC, Cholamandalam, and Bajaj Finance, which have created a lot of value for their investors in the long term. What happens is that financials are leveraged or high debt businesses. They raise debt on a comparatively small amount of equity capital and then they lend that money further as loans. This is their business model. In such cases, NBFCs have a lot of scope to borrow more and increase their ROE. Secondly, banking and finance is a highly regulated sector in India. They have to follow many rules and regulations. And in banking, RBI does not even issue licenses that easily. Because of this, competitive intensity remains low. In such a situation, if a small bank or NBFC executes well, then in the medium to long term, it can grow to become quite big in size. So in today's video, we will study three very interesting NBFC companies from different segments with you. But remember, none of these businesses is a buy or sell recommendation. Please keep that in mind. With that being said, let's get started. The first NBFC we will study is from the gold lending segment. What has happened is that due to the rise in gold prices, the demand for gold loans is also increasing. As gold rates increase, customers are able to borrow more money against the same quantity of gold. And here, the bank or NBFC is also able to lend more and earn higher interest income. Another benefit gold lenders got is that RBI has become very strict on unsecured lending, meaning loans without collateral. In the last 1.5 years, loan defaults in microfinance and unsecured lending have increased. Therefore, to keep sector's risk under control, many checks and standards have been introduced. Because of this too, the demand for gold-backed loans is increasing. People anyway need money for one reason or another. Now, if unsecured loans are not available, then the next option left is to pledge gold. That's why a very strong tailwind is going on in the gold loan segment. In this space, the business we will study is Capri Global Capital. Capri gives gold loans. Apart from this, they also give loans to MSMEs or your small businesses, home loans to buy houses, and also construction finance. That is loans to builders for construction of buildings and apartments. Their biggest segment is of gold loans itself. In their AUM or total loan book, gold loans have a 37% share. AUM or loan book is the money that any NBFC uses to give loans. After that, MSME loans and home loans are two segments that have 20 to 22% share each. Construction finance has 18%. Now, if you look a year ago, the share of gold loan segment used to be 31%, which has now increased to 37%. In Q1, that is April to June months, there has been a very strong 69% year-on-year growth. Housing finance AUM grew 32% and MSME segment saw 14% growth. Just like we track sales and profit growth in other companies, in finance companies, we have to track AUM and disbursements growth. Disbursements mean how many new loans are being given. Now, what's interesting here is that gold loan is a high margin segment. For example, Capri Global lends gold loans at the highest, that is 21% interest rate. Then in construction finance, it earns 17% interest. After that, MSME earns around 15 to 16% and home loans earn 13%. So as the contribution of gold loans in their AUM increases along with growth, we will also see margins expanding. Their management is also quite bullish about growth going forward. This year, they have given guidance of 16 to 17% ROE. Last year, their AUM grew 42% and this year, they are targeting 30% growth, in which they are most bullish on gold lending itself. Here, they are targeting 37 to 40% growth. In MSME and housing finance, both the target is 20 to 22% and in construction finance, 17 to 18%. They have a network of around 1138 branches across the country, in which they will be adding 200 to 250 more branches this year. So their branch expansion is also growing at a good rate. Capri's Q1 results were also very good. We covered this business earlier on our YouTube channel when they released the results. So we will not discuss them again here. But to summarize, the results were good only. AUM, interest income, net profit, etc. all grew at a healthy rate. Asset quality or NPAs have remained stable. So fundamentals of Capri are also strong. The company is growing quite fast. And for this expansion, they recently raised 2,000 crore rupees funding through a QIP. This was a very big fundraise. It happened at 146 rupees share price approx, and many famous investors like Prashant Jain, Sunil Singhania, Quant Small Cap Mutual Fund had invested in it. That's why if you look at their shareholding pattern, you will notice that promoter shareholding has diluted from 70% to 60%. At the same time, FII holding increased from 1% to 4.7, and DII's stake has increased from 14.5 to 20.5%. Capri Global is guiding to grow at 27 to 30% rate in the future as well. Their goal is to double the current AUM of almost 25,000 crore rupees right now to reach 50,000 crore by FY28. So it is a good growth business available at a good valuation, which you can study yourself once. The second business we will study is India Shelter Housing Finance. India Shelter gives home loans of around 10 lakh rupees, which are called affordable housing loans. They have a network of 290 branches across the country and a healthy ROE of 17.2%. India Shelter has approx 8,700 crore rupees of AUM, that is assets under management. Their AUM has increased 34% compared to last year, and disbursements, that is how many new loans are being given, have increased by 24%. So we can put India Shelter also in the category of fast growing NBFC, and actually in the entire housing finance space, this is the fastest growing business. India Shelter borrows this money from well-known institutions like National Housing Board, HDFC Bank, ICICI, Bank of Baroda, etc., and then lends it further to its customers in the form of home loans. Now, let me take 2 minutes here to explain the housing finance sector to you. This will help you to understand from where such good growth is coming. So people take different sizes of home loans according to their needs. Among these, loans of 5 to 20 lakh rupees are called affordable housing loans. These small loans are mostly taken in tier 2, tier 3 small cities and villages, and mostly by middle class or lower middle class income families. So the entire housing finance sector is growing at around 13 to 15% CAGR, but within housing finance, this affordable housing segment is growing at 21 to 23% rate annually. And the biggest reason for this growth is Pradhan Mantri Awas Yojana or PMAY, under which the government is giving subsidized home loans to middle class and low income families. Because of this, the entire affordable housing finance segment is currently going through a very good growth phase. Now let us quickly look at their June quarter results, that is results of April to June months. If you can read here, in Q1, AUM increased by a healthy 35%. The company is borrowing money at a rate of 8.6%, and on top of that, earning an average spread or margin of 6.4%. Then together, lending that money at 15% rate. Asset quality is strong and has remained stable. Profit of India Shelter has increased by a solid 43% in 1 year, and ROE, which was last year 14.3%, has now grown to 17.2%. So what we have here is a very good, fast growing and fundamentally strong NBFC business, which is also getting a lot of support from the government. Its management has also given guidance of 30 to 35% AUM growth going forward. I myself have been invested in India Shelter for the past 1 year, and I have given it a 6% allocation in my portfolio. One risk in such businesses that you need to be mindful of is the deterioration of asset quality. This happens when the people you have lent money to start defaulting or are unable to pay their EMIs, because when that happens, the NBFC's entire focus shifts from growth to recovering money, and the growth completely evaporates. So if you are interested in any NBFC like India Shelter, you will need to track this closely. Now I know I keep saying this and you don't listen, but still, as a humble request, if you are liking this video so far, do give me a thumbs up. Also, you can subscribe to our channel Simpli Stocks, where we bring multiple such videos every week. Honestly, your likes and subscribes are our only motivation, so that we keep bringing such high quality research to you for free. So do like this video, and yes, also subscribe to our channel. Coming back to our businesses, the third and last NBFC we will look at is SBFC Finance. SBFC gives secured loans to MSMEs or small businesses. Secured loans are those loans in which something has to be pledged as collateral. Only then the loan will be given. SBFC usually addresses underserved and underbanked customers, meaning those people who want to take a loan for first time for their businesses. They have a total of 215 branches across the country, and they give loans ranging from 5 lakh to 30 lakh rupees. As of now, in the entire MSME lending space, this segment is growing the fastest at around 24.4% CAGR. Now let's look at SBFC's business fundamentals and results. This video is getting a bit lengthy, so we will try to cover it as soon as possible. They have a total AUM of 9,350 crore approx, out of which 80% of their book is secured MSME segment. In Q1, their AUM increased 30% compared to last year, and they recorded 51% growth in disbursements. NPAs have increased slightly, but overall asset quality is still stable, so there is nothing to worry about. Their net profit has increased 28% compared to last year. SBFC gives these loans at around 18% interest rate, and the average loan size of their customers is 9.4 lakh rupees. There is currently some stress in the small loan segment. So to counter this, SBFC will be focusing on slightly bigger ticket size loans. In this direction, management has also given guidance that credit cost may increase by 15 to 20 BPS. Here you will need to keep tracking their credit cost to ensure that it is not increasing too much, because that will remain one risk. Anyway, that is something you need to track in all NBFCs. Overall, their target this year is to increase disbursements by 20% and AUM by 25%. So SBFC is also a good NBFC which you can study yourself. India Shelter, Capri Global and SBFC. Now all three are trading in an attractive range of 3 to 5 to 4 PB ratios. Valuation is attractive, and if I summarize growth wise, India Shelter has given guidance of 35% AUM growth, Capri Global 30% and SBFC 25%. Now before we part, if you give me 2 minutes more, I want to explain the difference between NBFCs and banks to you. This will help you a lot in analyzing NBFCs. So just like banks take FDs from us and then lend further, in the same way NBFCs also give loans, but they cannot take deposits from the public. They will go to banks or borrow from other institutions or HNIs like Adani, Ambani at 9 to 10% interest rate, and then lend further at 15, 20, 25% interest rate. Usually NBFC's customers are riskier than bank customers depending on which segment they are lending to, but NBFCs have freedom and flexibility compared to banks. Banks have to follow many rules and regulations of RBI, because of which they cannot grow rapidly. NBFCs have this advantage of growth. But that does not mean you won't find opportunities in banking. You will, but not as much as in NBFCs. Now, you tell me in the comments, out of these three, which NBFC did you like the most? And also let me know in the comments which banks or NBFCs you hold in your portfolio. And if you like this video, then do give me a thumbs up. Along with that, you can also subscribe to our channel, Simpli Stocks. For us, your likes and subscribes are the only motivation so that we keep bringing such videos to you for free. See you in the next video. Happy investing.